have a counter auction relative to that overnight inventory. You had that counter auction. When you see price go down in that counter auction relative to overnight inventory, it can be very confusing to your mind because you're watching what price is doing. Once we had the counter auction to overnight inventory, the market then started up on a short covering rally. Now, as that market went up on a short covering rally, notice the shape of the profile. It is P-shaped. The structure of the profile is informational. In other words, when we say P-shaped and informational, you're getting short covering, but you're not getting new money buying. That is very relevant. Now, if you will show, you've got the low, I think it's the CD low. If you can put a bar right across the CD low from yesterday. That CD low early on was exactly half back for yesterday. When the market, it rallied from there, and then late in the session, it came back within a single tick of that low. And then the market rallied again. So what was happening there is that the shorts were looking for a place to cover, and they used a mechanical reference which was half back from the early morning session. And then the market rallied the rest of the day. When I look at that, that tells me that is a very weak reference. And it's a very weak reference because of the mechanical action at that place. Now, what you will see is that overnight, the market took that out and the market traded down back below there. What is important for you to know as a trader is what has happened before is often very relevant to what happens going forward. So if you understand that where the market came from on the previous session was right on the lower, within a couple of ticks of the low of the multi-day trading range. That triggered short covering. What's important is to be able to distinguish between short covering and a combination of short covering and new money buying. All rallies are going to start with short covering. But the question then becomes, do you get short covering combined with new money buying? When you see yesterday's P-shape, that tells you that you did not get new money buying. You got short covering, what we call old business. Then you see that mechanical half back where we had the double prints there yesterday. That was weak, but that was mechanically where traders that were short came in to buy again. Now, the second time they came in to buy, and these are the nuances that you have to learn to pick up as a trader, and it takes a lot of years. The pace, when it came off of that second time, when it tested half back, the market had more oomph to it, and that really carried throughout most of the session. But remember that it was nothing more than short covering or old business. And now you see that very important to understand what was going on so you don't misinterpret price movement as, a strong market. Now, as we come into this morning, we have overnight inventory once again that is short. So the odds are that you get a short covering rally with overnight inventory being short. Those odds are about 75%. If you don't get a short covering rally, in other words, the market is short and it continues straight on down, that's a sign of some pretty decent selling. And that low from a couple of days ago, right at the bottom of the multi-day trading range, has great odds of being taken out. Like I say, the odds are 75% that you'll get a short covering rally. If you don't get that rally, the market is weak. If you do get that short covering rally, you want to see if there's any upside follow through to it. If there's any upside follow through to it, you will get back up through yesterday's high. Okay, but early this morning, it's so important to understand what was going on yesterday so you don't interpret it as a market being strong. All it was old business or short covering. Now, as we come into today, you want to see the market, there's no real excess on the low down there. So there's a possibility that it tests those lows. Okay, any fast questions or any questions?
Does anybody have any questions? So I'm just wondering, here's one, how we ended right at CD low yesterday, and that was where they tried to liquidate but couldn't do it. We're starting right at that location. Does that mean anything to you?
Not really. Not really. The main thing I look at this morning, there was a mechanical number that they saw. The main thing I look at this morning is do we get a counter auction relative to the overnight short inventory? And then the next thing we look to see, where's value going to build? Is value going to build higher, lower, or unchanged? We do not have, we had some liquidation at the high, but we didn't have any great selling. Okay. So in here, you start with, remember, it's the summer. Markets in the summer tend to be a little bit slower. But right now, the first thing this morning, we're going to open, we should, and I'm not looking at my chart, we should open within yesterday's range. Overnight inventory is short, and we go from there. Okay?
One question I have, David says, does breaking down the overnight session into Asia and London session give you additional actionable nuance levels or just more noise?
Just more noise. I don't, okay. I just look at the total session. I don't try and put too fine a look at it.
I know you said in the live Houston event that you say you don't trade the overnight. Do you trade the overnight now, or?
No, I don't trade the overnight, but that doesn't mean that I don't use the overnight to exit some trades. For example, I went home with some puts. And when the market came back down and took out that low I was talking about, where the bounce came from yesterday, and went down through there, I did take off and just book some profits because it's very short-term market. So I don't generally establish new positions, but I will use the overnight market to take profits from time to time or to hedge some position that I have.
I have one more question from David. Which puts do you use, ES, SPY, or SPX?
Well, I can't use the SPY for overnight because it doesn't trade overnight. I prefer, if I'm doing a short-term day time frame trade, I prefer the SPY. It's a tighter market, less slippage. If I'm doing something that's going to be overnight, I will use the ES.
Okay. Yeah, and that's it for the questions today. Thank you so much, Jim.
Thank you all very much. Bye now.
Bye.